A warm welcome to everyone joining us today on this webinar hosted by the International Ethics Standards Board for Accountants, formerly called as the IESBA. Today, we'll be discussing the proposals in the Engagement Team Group Audits, or the ETGA, exposure draft issued on March 24, 2022, with a closing date for submission of comments of May 31st. My name is Kala Vijayan. I'm a principal with the IESBA. We're very fortunate today to have Ms. Caroline Lee and Ms. Denise Canavan, who will take us through the key proposals in the exposure draft. Ms. Lee has been with the IESBA since January 2017 and has been a deputy chair of the IESBA since January 2021. She's also a member of the Engagement Team Group Audit Task Force since January 2021 and became the chair of the task force as of January 2022. Ms. Lee is a partner at KPMG in Singapore, and she is also the Asia Pacific Head of Quality and Risk Management. Ms. Canavan is former IESBA Technical Advisor and is currently a member of the ETGA Task Force. Ms. Canavan is a partner in the Deloitte US firm and is the Deloitte Global Independence Leader. I would also like to welcome our colleagues, Mr. Len Jui and Mr. Dan Montgomery, representative from the International Auditing and Assurance Standards Board, or the IESBA. They worked on the ISO 600 revised, which is a standard on special considerations, audit of group financial statements, including the work of component auditors. Before I hand the floor to Ms. Lee to commence the presentation, I would like to note a few house rules. You're welcome to post your questions using the Q&A function anytime during the session, and we will endeavor to answer your questions today. The slides will be distributed after the webinar, and we will post a video of the webinar subsequently, so you'll be able to access it at your convenience. Without further ado, I'll welcome Ms. Lee.
Thank you, Carla. Welcome, everyone, and thank you for joining us today. We are delighted to have 330 attendees with us, and we encourage all stakeholders to submit their written responses to the exposure draft. For today's webinar, I am pleased to have Denise co-present the webinar. Denise has been on the Engagement Team Group Audit Task Force since its inception. So let's get started and move to the next slide. Thanks, Dinah. We plan to cover 4 items in this webinar. We'll start with an explanation of the background to this project. Then we will take you through the proposals in the exposure draft, or the ED. This consists mainly of some proposed new terms and definitions and independence considerations in a group audit. Lastly, we will provide a brief update on proposed consequential and conforming amendments and timelines. On the next slide, we will go into the background. So during the IESBA's consultation on its strategy and work plan 2019 to 2023, there was support for the IESBA to consider a project to address practical issues encountered by group auditors as well as component auditors in applying the International Independence Standards in the audit of group financial statements, commonly known as group audits. As part of its monitoring of the external environment for emerging issues or developments, the IESBA's Emerging Issues and Outreach Committee identified a few matters relating to the application of the International Independence Standards with respect to component auditors. These include, firstly, the implications when a parent entity is a public interest entity and a component is a non-public interest entity that is audited by a non-network firm, as it was unclear whether the component auditor would need to follow the independence requirements that apply to audits of PIEs or non-PIEs. Secondly, the implication when a breach of independence occurs at a component auditor, as it was unclear what safeguards if any, should be applied if the group auditor still intends to use the component auditor's work. The IESBA determined that it would be appropriate to explore the need for clarifications in this area, but to do so in coordination with the IESB's project to revise ISA 600. The next slide touches on the IESBA's coordination with the IESB. This project came about as an IESBA initiative in coordination with the IESB as well. The definition of engagement team in the extant code was developed based on the engagement team definition in extant ISA 220. While the IESB intended to change the definition in ISA 220 for quality management purposes, the inclusion of component auditors in the revised definition raises several questions concerning compliance with the international independence standards in the context of group audits, given that the definitions of the term in the code and the ISAs are intended to be aligned. Many respondents to ED 220 requested clarification as to which engagement participants fall within or outside the definitions of group engagement team and component auditor, given different evolving team structures. In the light of the above and following coordination with the IESB on the ISA 220 project, the IESBA agreed to address the implications of the change in the definition of an engagement team from the code's perspective to make clear the independence requirements that apply to the various individuals who are part of the engagement team under the revised definition. The IESB, in turn, agreed to make clear in ISA 220 revised that the independence requirements applicable to members of the engagement team are specified in relevant ethical requirements, which, as defined in ISA 220 revised, include the code. A key aspect of extant ISA 600 that intersects with the international independence standards is the requirement for the group engagement team to obtain an understanding of whether a component auditor understands and will comply with the ethical requirements relevant to the group audit, and in particular, is independent. Some stakeholders highlighted the need to clarify the meaning of the phrase ethical requirements that are relevant to the group audit. Given that component auditors outside the group auditor firm's network who perform audit procedures for purposes of a group audit are part of the engagement team based on the revised definition in ISA 220 revised, it is necessary for the international independence standards to provide clear and consistent guidance concerning the independence of component auditors outside the network. Additionally, there is a need to go beyond individuals included in the engagement team definition and consider the independence framework applicable to the component auditor firms, given that ISA 600 revised establishes a requirement for the group engagement partner to take responsibility for confirming whether the component auditors understand and will comply with the relevant ethical requirements, including those related to independence that apply to the group audit engagement. In developing this exposure draft, the IESBA has engaged closely with the IESB to ensure that the proposed changes are consistent and interoperable with the ISAs, especially ISA 220 revised and ISA 600 revised. Such close coordination will continue until the completion of this project. And at this point, I would like to invite Landry from the IESB to say a few words. Len is the Deputy Chair of the IESB, and he's also the ISA 600 Revised Project Chair.
Thank you, Caroline, and welcome everybody to the IESBA webinar. On behalf of the IESB, Dan Montgomery, the principal staff on the ISA 600 project, and I would like to express our appreciation to IESBA and the staff, particularly for the engagement team, group audit task force members, for their support to the IESB's ISA 220 task force on the revision of the engagement team, as well as the ISA 600 group audit task force on the group audit standards. As you know, that the Public Interest Oversight Board recently approved the ISA 600 revised standards, and the IESB issued the final standards just a few days ago. So throughout the process, both boards and staff work closely to ensure projects are being developed seamlessly. The coordination goes beyond just the engagement team definition and the group audits. ISA 220 and ISA 600 are both integral parts of the quality management suite of standards. And the IESBA has been with the IESB along the way with the support to the ISQN1 and ISQN2 projects. And that coordination continues. As you know, that the IESBA finished the PI definitions standards recently, and now IESB is working on how to incorporate the PI definition into the ISA's literature. So as Caroline stated, the coordination will continue until the project is completed. And we're looking forward to the rest of the webinar, just like you, and turn back to you, Caroline.
Thanks, Len. And so now let's move on and go into the proposals in detail, starting first with the proposed definition in the exposure draft. So during the IESBA's engagement with various stakeholders in developing the ED, a clear message was that the IESBA's definitions should align with the IEESB's definitions. And so we worked within the definitions that the IEESB had approved. The proposed engagement team definition in the IESBA code aims to confirm or develop independence requirements applicable to those individuals covered by the extended IEESB definition, considering their roles and the specific facts and circumstances. This change has huge implications on the independence of individuals now captured as engagement team members, as the extant code only deals with individuals from the firm and network firm. The revised definition of engagement team in ISA 220 revised includes, among others, component auditors and service providers. ISA 220 revised is only applicable to audit engagements, whereas the extant code's definition of engagement team applies to audits and other assurance engagements. Therefore, the IESBA proposal to align its definition of engagement team with the more generic definition of engagement team in ISQN1 and include a reference to ISA 220 revised. Other ISAs were referenced to highlight the applicable standard to refer to for specific individuals, namely external experts and internal auditors, which the IEESB excluded from its definition of engagement team. During the IESBA's deliberation in developing the revised engagement team definition, questions were raised, including by the Public Interest Oversight Board, as to whether external experts should be subject to independence requirements in audits and other assurance engagements. The IEESB recognizes that given the specialized nature of external experts' work, it would not be appropriate to apply the same level of direction, supervision, and review over them as applicable to engagement team members. The IESBA recognized that ISA 620 already addresses the auditor's responsibilities relating to the work of an external expert in obtaining sufficient appropriate audit evidence, including the objectivity, competence, and capabilities of that individual. The IESBA also noted that addressing the matter of independence for external experts is outside the remit of this project. The IESBA nevertheless agreed to consider the matter as part of a future initiative. The IESBA noted that the extant definitions of the terms audit team, review team, and assurance team scope in only engagement quality reviews within the firm or the network. In reviewing the extant definitions of those terms, the IESBA agreed that engagement quality reviewers are individuals identified by the firm to perform engagement quality reviews, and such individuals can be sourced from within or outside the firm or its network. This is consistent with ISQM 2. The IESBA believes that engagement quality reviewers whose independence plays a vital role in promoting audit quality should be subject to the same independence requirements, regardless of whether they come from within or outside the firm or its network. Similarly, the IESBA believes that individuals who recommend the compensation of or who provide direct supervision, management, or other oversight of the engagement partner in connection with the performance of the audit engagement, or who provide consultation regarding technical or industry-specific issues, transactions, or events for the engagement should be members of the audit team, regardless of where they come from or whether they come from within the firm. Similar considerations apply with respect to reviews and other assurance engagements. As such, the IESBA proposes to amend the definitions of audit team, review team, and assurance team by adding the phrase or engaged by to subparagraph B of those definitions to include such individuals. During the development of these proposed revisions, a question was raised as to whether the phrase engaged by the firm would suggest that a firm enters into direct contractual agreement or engagement with individuals outside the firm, rather than the standard practice, which is for firms to be engaging other firms instead of the individuals themselves. The IESBA does not intend the code to be prescriptive in terms of the manner or type of contract, and noted that firms may, in some instances, contract with individuals directly. The code must, however, be clear as to which individuals are considered members of the audit team, review team, and assurance team. The change in B Roman 3 recognizes that it would not be appropriate to simply replace those who provide quality control for the engagement with those who provide quality management for the engagement. Because under ISQM 1, there may be many individuals who are involved in quality management within a firm beyond an engagement quality reviewer. Scoping in all of these individuals would be disproportionate. The IESBA has therefore focused that part of the definition on those who perform an engagement quality review or a review consistent with the objective of an engagement quality review. The concept of those who perform a review consistent with the objective of an engagement quality review is a concept that is already used in the IESBA's fee pronouncement, paragraph R410.18. Similar amendments are proposed to review team and assurance team definitions, and these are set out in on pages 48 and 51 of the exposure draft. Sorry, paragraphs 48 and 51 of the exposure draft. Going on to the next slide, as a result of aligning the proposed definition of engagement team with the definition of engagement team in ISQM 1, the IESBA is proposing to make it explicit that the international independence standards apply to individuals from service providers who perform audit work on an audit engagement. The proposals refer to the definition of service provider in ISQM 1. The IESBA proposes guidance to explain that the International Independence Standard address explicitly service providers' independence, especially those outside a firm's network in the context of group audits in paragraph 400.A and 400.B. In substance, this would not represent a change in practice because the extant code already defines individuals engaged by the firm or a network firm to perform audit work on the engagement to be part of the engagement team. Although an individual from a service provider would be covered by the International Independence Standard, the IESBA does not believe that the scope of the International Independence Standards should be extended to cover the individual's organization, other than in the case of a component auditor firm outside the group auditor firm's network, as Denise will walk you through later. This is because the individual's organization does not participate in the group audit and is further removed from it. Accordingly, the IESBA considers that it would be disproportionate to bring such individuals' organization into the scope of the International Independence Standards. Next slide, please. Different types of experts might be used on an audit engagement, including individuals with expertise in specialized area of accounting or auditing who perform audit procedures, individuals within or engaged by the firm who have direct influence over the outcome of the audit engagement through consultation regarding technical or industry-specific issues, transactions, or events for the engagement, and individuals who are external experts in fields other than accounting or auditing. The IESBA believes it is in the public interest to be clear whether different types of expert who might be used on an audit engagement are members of the engagement team or the audit team as defined in the code. These questions were raised during the IESBA's deliberation. Accordingly, the IESBA is proposing application material in paragraph 400C to make clear where these different types of experts stand. So in the first bullet, you'll see that they fall within the engagement team as they perform audit procedures. In the second bullet, they are consulted and therefore they are members of the audit team, but they are not the engagement team members as they don't directly perform audit procedures. In the third bullet, these experts are neither audit team or engagement team members as their specialization is in a field other than accounting or auditing. By the same token, the IESBA is proposing application material in paragraph 400D to clarify that an individual performing the engagement quality review is part of the audit team, but not the engagement team. So the IESBA welcomes comments on the revised definition of engagement team, the explanatory guidance in paragraphs 400 A to D that we've just looked at, and the revised definitions of audit team, review team, and assurance team, including the change to recognize that engagement quality reviewers may be sourced from outside a firm and its network. At this point, I would like to hand over to Denise to introduce section 405.
Thanks, Caroline. So now we're going to switch gears a little bit and talk about the independence requirements in the group audit context. And there are several aspects to this. So first is the independence requirements that apply to individuals. Then we're going to look at the independence requirements that apply to firms. And when looking at firms, the proposal addresses the group audit firm and component auditors from within the same network, as well as the component auditor firms outside the network. The proposal also addresses cases where there's a change of a component auditor firm during or after the period covered by the group financial statements. And the threats to the component auditor's independence are already present. And finally, there's a new section that addresses independence breaches that occur at a component auditor firm level. But before we do a deeper dive into these aspects to set the stage for our discussion, Caroline's going to take us through a number of definitions that have been brought over from the IESAs, as well as a number of new definitions.
Thanks, Denise. So as Denise mentioned, some of the new definitions in section 405 come directly from ISA 600 revised, and these are highlighted in gray on this slide and the next slide. Others are additional defined terms to demonstrate that the independence principles apply for individuals involved in the group audit engagement, as well as firms in and outside the group auditor firms network that are involved in the group audit engagement. The IESBA is proposing that, as defined, the group audit client includes not only its related entities in accordance with extant paragraph R400.20 of the code, but also any other components that are subject to audit work. This recognizes that the concept of a component in ISA 600 revised extends beyond a legal entity and includes a business unit, function, or business activity, or some combination thereof. As the definition of a component in ISA 600 revised is not limited to a legal entity, but as I mentioned, also includes a business unit, function, or business activity, or some combination thereof, the IESBA is proposing greater specificity in the definition of a component audit client, depending on the nature of the component. So when the component is a legal entity, which is in A, the component audit client will be the entity itself and any related entity it controls directly or indirectly. Having regard to the code's definition of a related entity, the IESBA believes it would be disproportionate to scope in any other related entities of the entity, given that these other related entities are further removed from the audit of the component. When the component is a business unit, function, or business activity, or some combination thereof, which is the definition in B, the component audit client will be the legal entity or entities to which the business unit belongs, or in which the function or business activity is being performed. The IESBA is proposing to take a proportionate approach by not scoping the related entities of such legal entity or entities into the definition. This is because in practice, control and management of the business unit function or business activity will rest within the legal entity or entities. On this slide, the definition of audit team for the group audit is based on the definition of audit team, but adapted for group audit. It reflects individuals performing audit procedures on the group audit, including individuals from component auditor firms outside of the group auditor firm's network. In developing this definition, the IESBA noted that based on the generic definition of audit team, all those within or engaged by the group auditor firm and all those within the group auditor firm's network would be scoped in if they can directly influence the outcome of the group audit. The IESBA considered whether the definition of audit team for the group audit should be extended to include individuals within a component auditor firm outside of the group auditor firm's network who can directly influence the outcome of the group audit. The IESBA observed that it would be rare in practice for such individuals to be able to directly influence the outcome of the group audit if they're not otherwise performing audit work at a component. Nevertheless, IESBA is proposing to scope in these individuals within the definition so that they would be captured, even if such a situation would be rare. So look at the highlighted subparagraph D of the proposed definition for an explanation for the text of what I'm referring to. Denise will now walk you through the proposed independence requirements in a group audit context.
Thanks, Caroline. So first, we're going to talk about individuals. When it comes to individuals, the IESBA considered whether individuals from non-network component auditor firms who are performing work on the component for the group audit should be subject to the same personal independence requirements as individuals from the group audit firm and their network firms. Now, the IESBA believes that the work performed by individuals at component auditor firms, it's an important contributor to the group audit. And that's whether the individuals are from the group auditor firm's network or not. So therefore, the proposed concept is really quite simple, that all individuals who are members of the audit team for the group audit are required to be independent of the group audit client. So that's full stop. And as a reminder, the definition of the group audit client includes its related entities, as well as any other components that are subject to audit work. And so we welcome your specific thoughts on this requirements, that all individuals who are part of the audit team for the group audit will be subject to the same independence requirements. But now let's turn to the independence requirements for firms on the next slide. So first, we look at the group auditor firm and its network firms. And these concepts are quite similar to the principles that are already found in the Extant Code. Essentially, the group auditor firm and its network need to be independent of the group audit client. However, as a reminder, in the context of a group audit, this includes other components scoped in under ISA 600 revised. So even though those entities aren't considered to be related entities under the code. But now let's look at the proposal for a component auditor firm that's outside of the group auditor firm's network. On the next slide. Okay. So when we think about the independence of a component auditor firm, it's important to start with the concept of the relevant ethical requirements for the group, as these are the requirements that will then flow down to the component auditor firm. As we know, the IESBA code has different independence requirements for audit clients that are public interest entities or PIs, and for audit clients that are not PIs. So the principle in the proposed standard is that the requirements for the group will be the requirements for the components. So there's consistency and uniformity across the entire group. So let's take, for example, that the group is a PI. The component auditor firm will follow the independence requirements for a PI for purposes of the work performed at the component for the group audit. And that's regardless of whether or not the component audit client is itself a PI. This is a concept that has the biggest impact for non-network firms because, as we discussed on the prior slide, the network firms are already subject to the same independence requirements as for the firm itself, even when they don't even participate in the group audit. So similarly, if the group audit client is not a PI, the component auditor firm will follow the non-PI independence requirements for purposes of the group audit, regardless of whether the component audit client is a PI or not. So now it is worth pointing out that if the component audit client is a PI and the component auditor firm is also performing a statutory audit on that component audit client, the component auditor firm would need to follow the PI requirements for that statutory audit, even if the group audit client is a non-PI. So regardless of whether the group is a PI or not a PI, as we'll discuss next, the component auditor firm needs to apply the conceptual framework when considering other relationships or circumstances in the group. So now that we've set the stage on the relevant ethical requirements, let's look at the proposed detailed requirements for component auditor firms that are outside the group auditors network. So the next slide, please. Now, the IESBA spent quite a bit of time assessing the requirements that would apply to a component auditor firm outside of the group auditor firm's network and the entities to which the independence provisions should apply. And we're looking at feedback in this area in general, as well as a couple of specific points. So the first key principle for a non-network component auditor firm is to be independent with respect to the component audit client, based on the definition of the component audit client that Caroline just presented a few minutes ago. So again, as discussed on the last slide, the independence requirements will be dictated by whether the group audit client is a PI or a non-PI. Next, the component auditor firm is not permitted to have a direct or a material indirect financial interest in the group audit client. The IESBA recognized that the code currently prohibits such a financial interest in an upstream controlling entity when the audit client is material to such an entity. But given the prohibition on the group auditor firm and its network firm from having such an interest, the IESBA felt that a consistent approach was warranted in this particular area, and that the component auditor firm should also not have a prohibited financial interest in the entity on whose financial statements the group auditor firm expresses an opinion. And this is regardless of the materiality of the component audit client with respect to the group audit client. And similarly, the provisions on loans and guarantees would apply to the non-network component auditor firm with respect to the entity on whose financial statements the group auditor firm expresses an opinion. This was an area that had considerable discussion at the IESBA, and it was decided it should be specifically addressed due to the financial nature of the relationships of loans and guarantees. It was also discussed whether these provisions should apply to any intermediate entities between the group audit client and the component audit client. And ultimately, the IESBA decided to specify the provisions with respect to only the entity on whose financial statements the group auditor firm expresses an opinion. But the relationships with other entities, including any intermediate entities between that group audit client and the component audit client, would still get addressed under the conceptual framework, as we'll discuss next. So these are specific questions. There are specific questions about both the financial interests and the loans and guarantees involving the group audit client. And we welcome your feedback on these two topics. And finally, we turn to the conceptual framework. So the proposal requires the component auditor firm to apply the conceptual framework in two cases. So first, it's for any other relationships or circumstances involving the component auditor firm and the group audit client, and any relationships or circumstances involving the component auditor firm's network and the component audit client or the group audit client. And when applying this conceptual framework, the component auditor firm would consider those relationships and circumstances that they know or have reason to believe are relevant to the evaluation of independence. And the proposed standard also has guidance in two specific areas that are especially relevant when the group audit client is a PI. So first, it's the determination of key audit partners. In order to highlight the relevance and linkage of the key audit partner concept to a group audit, the IESBA is proposing guidance in section 405 to explain that a group engagement partner might determine that an engagement partner who performs audit work related to a component for purposes of the group audit is a key audit partner for the group audit. And this would be because that individual's role in making key decisions and judgments on significant matters with respect to the audit of the group financial statements. So then it would follow that once the group engagement partner has communicated that determination to the individual will be subject to the provisions in the code that apply to key audit partners, so such as long association. So again, given that the key audit partner provisions of the code apply mostly in the context of audits of PIs, the IESBA is proposing that this guidance be placed within a subsection of section 405 that deals with group audit clients that are PIs. And another area where the proposal has additional guidance is for non-assurance services. The IESBA is proposing to make it clear that where the group audit client is a PI, the independence requirements for non-assurance services provided by a non-network component auditor firm to the component audit client are those that are applicable to PIs. So again, even when the component audit client is not itself a PI. And this is consistent with overarching principle that we've discussed a couple of times already, where the group audit client's a PI, the provisions applicable to the audit of the component audit client are the PI provisions. The IESBA felt it was also important to explain how the self-review threat prohibition and the revised non-assurance provisions should be applied in circumstances where the non-network component auditor firms provides limited scope work for the purposes of the group audit. So for example, when the audit work is limited to a specific line item such as inventory. In these circumstances, the reference point for the component auditor firm in evaluating the self-review threat that might be created by their provision of non-assurance services to the component audit client is the financial information on which the component auditor firm is performing audit work for purposes of the group audit. So any other financial information that of the component audit client would not be relevant to the evaluation of that self-review threat because that other information wouldn't be subject to the audit work by the component auditor firm. We welcome any comments on whether the proposed application material that is in paragraphs 405.12 A1 and A2 that relates to non-network component auditor firms' provision of non-assurance services to a component audit client is sufficiently clear and appropriate. So now I'm going to pass back to Caroline to explain more about the rationale for treating the component auditor firm a bit differently from the group auditor firm and its network.
Thanks, Denise. So this to us is a very important slide, and we hope that the message that we put across comes through clearly. A network is created by a larger structure of firms and other entities aimed at cooperation and that share costs or have a common profit pool, common control, ownership or management, common quality control policies and procedures, common business strategy, common brand name, or that share a significant part of professional resources. These commonalities create a close association between a firm and its network firms. As a result, R 400.51 in Part 4A of the Code requires that a network firm shall be independent of the audit clients of the other firms within the network. Network firms are subject to the same independence requirements as a group auditor firm, even when they are not component auditor firms in a group audit context. Therefore, there are no new independence principles for component auditor firms in the group auditor firms network. In the case of component auditor firms outside the group auditor firms network, there are new independence requirements, but these are limited in scope in terms of entities the component auditor firms have to be independent of. A limited scope recognizes that the component auditor firm's work is limited in that it is focused on the component audit client, and that work is subject to review by the group auditor firm. It is often the group auditor firm that determines the scope of work to be carried out by the component auditor firm. A proportionate approach to the independence requirements for component auditor firms outside the group auditor firm's network avoids unintended consequences of potentially limiting the choice or supply of component auditor firms for audits of component audit clients for group audit purposes. Paragraph 405.2A2 does make it clear that if a component auditor firm is engaged separately to issue an audit opinion on the financial statements of the component audit client for statutory, regulatory, or other reasons, the component auditor firm might need to comply with independence requirements different from those that would apply for purposes of the group audit. And this was illustrated by Denise earlier. So moving on to the next slide, there might be circumstances in which a group auditor firm requests another firm to perform audit work as a component auditor firm during or after the period covered by the group financial statements. For example, as a result of an acquisition by the group audit client. To address these types of circumstances, the IESBA is proposing guidance based on the extant provisions of the code dealing with an entity becoming an audit client during or after the period covered by the financial statements on which a firm will express an opinion. The proposed guidance explains that a threat to the component auditor firm's independence might be created by financial or business relationships of the component auditor firm with the component audit client during or after the period covered by the group financial statements, but before the component auditor firm agrees to perform the audit work, or by previous services provided to the component audit client by the component auditor firm. Leveraging guidance in the extant code, the proposed guidance also addresses the situation where a non-assurance service was provided by the component auditor firm to the component audit client during or after the period covered by the group financial statements, but before the component auditor firm begins to perform the audit work for purposes of the group audit. And the non-assurance service would not be permitted during the engagement period. These proposals, which are reflected in paragraphs 405.13A1 and A2, would apply whether or not the group audit client is a PI. In developing the provisions addressing changes in component auditor firms, the IESBA identified the need for conforming amendment to paragraph R400.31b of the revised non-assurance services provisions to align that subparagraph to the proposed paragraph 405.13a1b. The effect of this proposed conforming amendment is to not exclude from a firm's consideration any threats to independence created by previous services provided by the firm or a network firm to an audit client during or after the current financial statement period under audit. We welcome comments on the proposed application material relating to changes in component auditor firms during or after the period covered by the group financial statements. Moving on to the next slide.
No, if we could just go back a slide, Diana. Thanks. Yes, so one area that the IESBA believes needs to be clarified in the code is the process to address a breach of an independence requirement at the component auditor firm level. So first, a bit of background in this area. So under the Extant Code, a breach of an independence requirement by a network firm effectively is the same as a breach of an independence requirement by the firm. So because of this, the breach needs to be addressed in the same way, given the requirement for the network firm to be independent of the audit clients of other firms within the same network. So therefore, if a component auditor firm within the group auditor firm's network concludes that a breach has occurred, the component auditor firm first communicates the breach immediately to the group engagement partner. And then the group engagement partner is required to assess the breach of independence and determine the appropriate actions to take in accordance with the Extant provisions of the code that deals with breaches. So that part is quite straightforward. Now, where additional guidance was required in the code is where a breach is identified at the component auditor firm level outside of the group auditor firm's network. And one of the practical issues when dealing with component auditor firms outside the group auditor firm's network in a group audit context is that it isn't practicable for the group auditor firm to implement the monitoring and the disciplinary procedures that are necessary to ensure that the component auditor firm's compliance with all the applicable independence requirements for the group audit. And this is mainly because these non-network component auditor firms are outside of the group auditor firm's control. And so for this reason, ISO 600 revised requires the group auditor firm to confirm the component auditor firm's understanding of and compliance with the relevant ethical requirements. But let's take a look at the process the IESBA is proposing when there's a breach at a component auditor firm outside the group auditor firm's network. Well, there are a variety of instances which could lead to a breach of the independence requirements. And the IESBA doesn't believe that it's in the public interest to cast doubt on the reliability of all of the audit work performed for the group audit if the breach in relation to a component audit client was inadvertent and insignificant. But a careful consideration of the facts and circumstances of the breach at the component auditor firm level is necessary to determine if the group auditor firm can use the work of the component auditor firm that's outside their network. So using the breach provisions that are in the Extant Code as a framework, the IESBA is proposing a process which would consist of several steps. So the first step, which is on the screen right now, is when the component auditor firm outside the network of the group auditor firm identifies the breach, they would be responsible for addressing the breach, evaluating its significance and its impact on their objectivity and their ability to perform audit work for the group audit, and determining any actions to address the breach. Then the component auditor firm would be required to promptly communicate the matter and their assessment of the breach to the group engagement partner. So now switching to the group engagement partner, if you click the slide, please. Next, it's up to the group engagement partner to evaluate the component auditor's assessment and the impact on objectivity. Now, the group engagement partner might agree with the assessment, or they might determine further action needs to be taken in order to enable the group auditor firm to use the work of that component auditor firm. And there could be situations where the group engagement partner determines that under the circumstances, they just can't use the work of the component auditor firm at all. And they would need to find some other means to obtain the necessary audit evidence at the component. So for example, the group auditor firm might determine that it needs to perform the audit work at the component itself. And as the last step in the process, we have the communication with those charged with governance. If you click the slide, please. So finally, the group engagement partner would have to communicate the breach to those charged with governance of the group audit client. And when doing so, the partner would discuss the significance of the breach and whether any actions proposed or taken would address the breach in order to enable the group auditor firm to use the work of that component auditor firm. Now, if those charged with governance don't concur with the conclusion, then the group auditor firm would not be able to use the work of that component auditor firm for purposes of the group audit. And so we are specifically looking for reactions to this proposal that I've just laid out before you for addressing breaches. Now, Caroline, why don't you take us through the conforming amendments that are being proposed?
Thanks, Denise. So we'll now cover the last agenda item on proposed consequential and conforming amendments and timeline. So on the next slide, the ED also includes proposed consequential and conforming amendments to the code, and these are set out in chapters 2 to 6 of the exposure draft. Chapter 2 on proposed conforming amendments to section 360 of the code is to align with ISA 600 revised terminology. And this is around communication of non-compliance or suspected non-compliance with laws and regulations in the context of groups. Bear in mind that the definition of a component is not limited to a legal entity, but also includes, amongst others, a business unit. In chapter 3, the proposed conforming amendment is to the revised non-assurance service provisions. And it was what I mentioned earlier when I covered changes in the component auditor firm. In chapter 4, the proposed conforming amendments result from the revision to the definition of engagement team. In chapter 5, the proposed quality management related consequential amendments are reflected here. And in chapter 6, proposed changes to the glossary. A few other matters were raised during the project to develop quality management related conforming amendments to the code. However, as these matters are outside the scope of the engagement team group audit project, they will be considered as the IESBA develops its future strategy and work plan. So do let us know if you agree with the proposed consequential and conforming amendments. On the next slide, comments are requested by March 31st, after which a high-level overview of issues will be presented at the June IESBA meeting, with a detailed discussion of issues at the September IESBA meeting. The aim is to approve the final standard at the December 2022 IESBA meeting. So on the next slide, we'll address the effective date. So as mentioned at the start, these proposals aim to respond to questions and concerns about the application of the International Independence Standards in the context of group audits. The enhancements to the code resulting from this project will clarify and strengthen the International Independence Standards and contribute to public trust and confidence in the quality of group audits. To align the effective date of the final pronouncements with the effective date of ISA 600 revised, and assuming that the IESBA will approve the final pronouncement in December 2022, the effective date of the engagement team group audit provisions will be for audits of financial statements for periods beginning on or after December 15, 2023. And we appreciate any comments that you may have on this. So with this, we've come to the end of the presentation segment of our webinar. And thank you for your attention. We welcome written comments on all matters addressed in the exposure draft, in particular, those matters identified during our webinar. Please include reference to specific paragraphs as you submit your comments. Where you do not agree with a proposal, your reasons and specific suggested text would be helpful. Where you agree or are supportive, please note that in your comments. We also seek written comments from various constituents, the small and medium practices, regulators, developing nations, and those who translate the code to their local language. So I would encourage all of you to share with us your comments and submit them by May 31st, given that we do have quite an aggressive timeline to finalize the standard. Thank you once again, and I will now turn over to Carla for the Q&A segment.
Thank you, Caroline and Denise, for your comprehensive presentation today. We would like to invest the remaining time to answer a few of the questions we received today. So I would turn to Caroline for question number 1. We received a question from Stacy. It says, for specialized expertise in accounting and auditing, have you considered the increasing complexity of types of procedures as it relates to cryptocurrencies or blockchain or other fintech, and where does this fall?
Thanks, Stacy, for your question. So I guess it starts with whether the individuals who provide these expertise are actually performing audit procedures, or they're carrying out work in the audit itself. And if they are, then they would be engagement team members. But if they are being used as experts and they're not actually performing audit procedures, then given that if their specialization is in areas other than accounting and auditing, then they would not be considered engagement team or audit team members. But if the view is that their expertise is in accounting or auditing, and they're not involved in performing audit procedures, then whilst they're not members of the engagement team, they might be considered members of the audit team, given that we do have a limb about providing consultation regarding technical or industry-specific issues, transactions, or events for the engagement. So I would think that it very much depends on, firstly, whether or not they are providing audit work or performing audit work. And then secondly, the area of specialization that they are bringing to the engagement. And this very much would depend on the IESB standard as well. Carla, back to you.
Thank you, Caroline. We have next question from Paul Ellsworth. The question is, large PIE client audited by the Big Four, and we audit component A. Component B is also owned by the PI client, and we perform purchase price allocation or valuation for that component that will be audited by the PI group auditor. The valuation service would be prohibited if we were the PI auditor, but since it is not subject to our audit, which is a component auditor, are we allowed to perform this service? Denise, do you have any thoughts on this? I'm sorry, Denise, we can't seem to hear you.
Sorry about that. It's only been 2 years on Zoom and I still haven't figured out the mute button. But if you keep in mind the definition of component audit client, it's the audit client and its downstream entities, right? So in this case that Paul's speaking about, you have your component audit client, you have your PI, and then you have a sister entity essentially that's being audited by the other firm. So in this case, that component audit firm that's doing the work at component audit client A, they would not be prohibited from doing that valuation at the sister entity because that would not be subject to the audit work that's being performed by the component auditor at A. So if you look at the definition of component audit client, you'll see how that service would not be prohibited at that sister entity.
I hope that clarifies your question, Paul. Yes, thank you, Denise. And we have another one from Stacy, and the question is, the process on breaches seemed to rely on the component auditor concluding that it was in fact a breach, but what if there is a judgment in reaching that conclusion? There does not seem to be a requirement to notify the group of significant judgments applied in determining whether a breach has occurred. Denise,
Yeah,
I believe you covered the section on breaches. Yes.
Yeah, I'm happy to take this one, Carla. So under the proposal, the component auditor firm is responsible for assessing the breach and for providing that information to the group engagement partner. You're right, Stacy, there is no mention about significant judgments that are made. Hopefully that would come out in the information that's passed along. But if you feel that this is something that should be specifically addressed in the standard, then please provide comments and we're happy to consider that when we look at all the comments that we receive.
Denise, if I may add to your comment there, if that's okay.
Sure.
There is some guidance in ISA 600 revised that basically points to ISA 220 revised because ISA 220 does require the engagement partner to remain alert for the audit for actual or suspected breaches of relevant ethical requirements by the engagement team. And as Caroline has explained earlier, engagement team members may include individuals at the component auditor firm level. And the guidance in ISA 600 revised basically indicates that, well, first of all, it acknowledges that may be challenging in a group audit context when component auditors do not use common network services and so forth. In other words, they're out of network. And in those circumstances, the group engagement team may also choose to instruct component auditors to communicate relevant information to the group engagement partner. So in other words, it's kind of addressed within the scope of ISA 200 revised as part of quality management at the engagement level. And the engagement team basically would engage with the component auditor firm with regard to any matters that concern compliance with relevant ethical requirements. And that may well include, as indicated, instructions for the component auditors to communicate relevant information that they believe would be of note to the group engagement partner. So I would say it is covered under the ISAs rather than under the code, but it is certainly a point that we can take on board and reflect further.
Yeah, and just to add on that. ISA 600 revised actually strengthens and clarifies this two-way communication between the group auditor and the component auditor. So as Ken mentioned, there are provisions in ISO 600 revised. And Carla, I also believe there was one last question, and it might be that I might have misstated what the closing date for the comment period is, and it's 31st of May 2022, and not, I might have said it was March. So just to be clear, May 31st is the closing date for comments. We appreciate if you can send in your comments earlier rather than later, because it then allows us to review those comments at an earlier date. Thank you.
Thanks, Caroline, for the reminder. And I'd like to remind all participants that if you have any questions, please type your answer in the Q&A session rather than raising your hands. And we'll give it another few minutes to see if you have any questions come through. And we do have another one from Paul, and it talks about the same PI situation where we audit the component. So the Big Four audits PI and consider them as a component auditor. The engagement team members could not invest in a PI, and presumably neither could the chain of command. But what about the other network firms in the network, if they have investment or relationships with the PI on the component? And I think this is the exact situation of one of the requirements that we brought in. So Caroline or Denise, any thoughts?
Yeah, so this is what we covered, that the component auditor firm itself would not be permitted to have a financial interest in the PI. When it comes to other firms in the network, though, we used a more proportionate approach, and the prohibition did not extend to those other firms in the component auditor firms network. So we're talking outside the group auditor firms, right? But you still have to apply the conceptual framework. So if there was a relationship, including a financial interest, that was relevant, that would have to be taken into account.
Thank you, Denise. There is a related question that came from Kelly on that again. Is the clarification on a question about valuation for a sister company. If they're using PI independence rules, then even though valuation would not normally be prohibited for the sister entity, the PI independence rules require that they comply with all related entities of the parent company.
Right. Yeah, and maybe a different way to think about this is to think about kind of where your feet are planted in the audit of that group. So while you're absolutely correct, Kelly, that if you were auditing at the top, that you couldn't do valuation anywhere down below. But since you're auditing, say, a subsidiary, that valuation that's being done for a sister entity, you would have no self-review threat. Now, this is only for the component auditor firm outside the network of the group audit firm. So you would kind of look to see, would that work be subject to your audit? If you're only doing audit work at the one component, that valuation that's being done in another component wouldn't be subject to your audit procedures or your audit work. So hopefully that clarifies.
Thank you, Denise. And we have two other questions that pretty much related to the change in definition and engagement team. So we have a question from Jillian. Did IESBA discuss the impact of the change in definition and engagement team should assurance on ESG become part of the audit, such that work on scope 3 emissions would have to be covered by others who are neither component or group auditors? That's question number one. Number two is from Paul Thompson, who said, have you investigated the possible impact on market structure of the new proposals and how they would impact CAs?
Right. Maybe let me have a go at answering these and give Denise a break. So did we discuss the impact of the change in definition should assurance on ESG become part of the audit, such that work on scope 3 emissions would have to be covered by others who are neither component nor group auditors. To be frank, we've not discussed or considered ESG, and that's something that the IESBA is considering or looking to work on as part of, and we are sending out a survey to get inputs on our strategy and work plan for 2024 to 2027. But we think that there's a possibility that we would need to work on ESG ahead of time, and we have established a working group for that purpose. So we've not looked at the impact of this, and we're very much guided by the IESB in their definition, because as we mentioned throughout, the coordination with IESB is one of the initiatives or drivers for this project.
Thank you.
Yeah.
Sorry,
Paul's question about whether we have investigated the possible impact on market structure of the new proposals, in particular, whether they will adversely impact component auditor firms. This is something that the task force and the board did consider in great depth and detail. We had extensive discussion, especially in our December 2021 meeting, because there is concern about the lack of choice or the impact on supply of component auditor firms. And as a result, that led us to apply what we call the proportionate approach. And hopefully that will help to to avoid any adverse impact on the market structure. But we would appreciate comments from various stakeholders on your views on this. Thank you.
Thank you, Caroline. That was much appreciated. I hope that clarifies the question for Paul. And we have a question that related to breaches again. So I'll turn to you, Denise. The question is, I think it's a clarification of the process. So the question is, for component auditors which are not part of the same firm network as the group auditor, if such component reports a breach of independence to the group engagement partner, and if understood well, the group engagement partner should evaluate such breach and its impact. And if the group engagement partner intends to use audit evidence from the component after evaluating the breach, and the group engagement partner must concur the judgment from those charged with governance at the corporate level. And if those charged with governance do not concur with the assessment, the group engagement partner shall then obtain audit evidence on the component by audit procedures other than the component auditor itself. So is that process correct?
Yes, absolutely, Miguel. So there are essentially a couple of different decision points in this that the group engagement partner is going to make. First is when they get all the information from the component auditor firm that they're going to make an assessment. Can they use the audit work of that component auditor firm? And assuming they feel comfortable with it, with whatever actions they're being taken, and they feel comfortable, then the next step is to go to those charged with governance and make sure those charged with governance are comfortable. Now, it could be that in that first step, the group engagement partner feels that they cannot use the work of the component auditor firm, and then they would need to find some other means of obtaining the audit evidence. And it could be in that final stage that the group engagement partner feels comfortable, but those charged with governance are not. And in that case, the work of that component auditor firm from outside the network could not be used. So it could be in either of those couple of steps that that the group audit firm would have to get some other means of obtaining that evidence. But your understanding is right, Miguel.
And I would, Miguel, I would refer you to Appendix 2 of the exposure draft. In there, we do have a flow chart that sets out in diagrammatic form the steps or the decision tree. So I think that might help.
Thank you, Caroline and Denise. I believe we do have one more, and that is an interesting clarification one. It refers to directly influence the outcome of the audit. What does it actually mean? Would that cover some expert outside the accounting be seen as influencing the audit? So appreciate some clarification there.
Ken, would you like to take this one?
Well, certainly, Caroline, my pleasure. So it is a good question, and I would really turn to how we have defined the concept of an audit team in the code, as Caroline indicated earlier, and I don't know if you can put up the slides earlier, but it's the definition of audit team for the group audit now includes basically the concept of individuals who provide advice on the industry-specific issues, technical issues, and the like. So they are considered part of the audit team for the group audit because they are able to exert a direct influence on the outcome of the audit, basically through their advice. So they would be considered members of the audit team. Your question is, wouldn't some experts outside of accounting be seen to influence the audit? I would say this question relates more to the definition of an engagement team. The definition of an engagement team, as revised, continues to exclude external experts who do not who are basically experts outside of accounting or auditing. So they are not part of the work of the auditors per se in terms of bringing accounting or auditing expertise to the team. They are considered external experts, and the definition of an engagement team explicitly excludes those external experts. That said, those external experts are covered through ISA 620 in terms of the review of the work and the input they provide to the audit process. So whatever input they provide will be subject to the requirements of ISA 620 insofar as the audit team will be concerned in terms of reviewing their input. So that's how I would say those external experts come in. They come in not through the operation of the definition of an audit team for independence purposes, but they come in through ISA 220 in terms of the contribution to their work to audit evidence that is gathered. I hope that sort of clarifies your question. It's a bit of a long-winded way to kind of address it, but I think it's important to be clear as to where sort of external experts come into play insofar as the definitions are concerned.
So that's on slides 6 and 7. And Carla, there was a question about how the slides would be made available to participants.
Yes, Caroline, we did see that question, and subsequent to this webinar series of webinar, there's another one we're holding next Tuesday on the 19th. Subsequent to that, we'll be sharing the presentation slides to participants who registered. I think we've come to the end of the questions that we have in the Q&A box, and looking at the hour, we'll almost come to the end of the webinar. So I'll pause here to see if we have a minute or two if there's any more questions. Otherwise, thank you, Caroline and Denise, for your great presentation today, and the very productive Q&A session, and Ken as well, who's the Senior Technical Director at IESBA. Thank you for joining us today. And first and foremost, thank you to all the participants for making the effort, the time to listen into webinar today. We hope to receive your submission, which is due on May 31st. And please do reach out to us if you have any questions in the meantime about your submission, but we look forward to receiving your submissions.
Thanks, everyone.
Thank you.
Thank you.